In the Indian auto space, Tata Motors is one such stock that drove the fastest in 2021. Tata Motors is up 158% in the calendar year 2021, while talking about the rest of 7 large cap leaders in the Indian auto space. An average return of negative 3% is seen in this particular year. So you can actually see what kind of a rise has been seen in the Tata Motors. Is definitely seem to be a leader in the Indian auto space this particular year, and there are reasons for this one, and let me highlight and give you a recap of this one. Firstly, let me start with highlighting how big is Tata Motors. An interesting fact came up when we see the revenues in the 12-month trailing period for Tata Motors. It has been clocked at 2.9 lakh crores. Mark my figure, 2.9 lakh crores. And against this, you combine the revenues for the rest of 7 large cap players in the Indian auto space, definitely. That is Maruti Suzuki, M&M, Ashok Leyland, TVS, Eicher Motors, Hero MotoCorp and Bajaj Auto. You combine all of that and the 12 months trailing consolidated revenue will be 2.9 lakh crores. So you can see how big is Tata Motors right now. But what are the reasons for such a rally in the stock price in the current year of calendar year 2021? Firstly, let me start with their JLR division. So Tata Motors is somewhat seen to be a global player. Definitely on the back of the JLR driving around 80% of their revenues in the consolidated revenues I'm talking about. So this particular year, after the Brexit does settle down, the global recovery in demand of their JLR segment was actually very helpful. And not only that, this particular year, the JLR division came up with their reimagined strategy that had focused in the electrification of their JLR segment, along with they did highlight what are their EBIT margins target, their cost cutting initiatives and rest of that. They say that the new model cycle will be in FY23 and 24 will be the years for that, where the EV shares is expected to rise, and the Range Rover and Range Rover Sport are the highest margin models for the JLR segment, and both are coming up with the upgrade in FY23. But then amidst the middle of the year, there was an announcement that semiconductor shortage issue has been impacting the company and the auto industry overall, and Tata Motors was the first company, remember, to come up with an official announcement. The stock was actually sloshed in the markets in that particular day, but after that it recovered quite well, because going forward in the latest quarterly results, they do mention that the cash outflow, what they were expecting, was actually less than that. And not only that, the semiconductor shortage issue has now started to ease out. So good recovery has been seen, but on the other hand, the demand was back then holding very strong, and the JLR order book is holding strong as of now. And along with that, in their EBIT margin, they have set a 10% of EBIT margin target in FY26. So that is about JLR. Now let's come to their passenger vehicle segment. This year has been fantastic for this as well, especially in the EV segment. We all know why, because they did get the private equity guys into their EV unit, where TPG Rise was the major one. The market share gain has been seen in the overall Indian passenger vehicle segment, with a market share of 10% was clocked in this particular year, which was the highest which was seen after Q4 of FY16. So like after 3 years of gap, they have come up and gained such a market share. All the other ICE engine vehicles are doing really well for the company. Latest one is the Punch that they have launched. And in the electric vehicle segment, they do have 3 models as of now, and they have a leadership in that as well. Currently in the Indian electric vehicle car space, Tata Motors holds 70% of the market share, and not only that, they have now got a private equity inside it, and they have future plans for EVs as well, where they say that they will launch 10 EVs by FY26, and their EV funding will be more than $2 billion in the next 5 years is that what they are working with. And lastly, talking about their commercial vehicle segment, so that has seen quite a good recovery, especially in the second half after we recovered from the second COVID wave blues. They are holding around 42% of the market share, which is 2.5 times of the peers like Ashok Leyland. So there also the company has been doing really well. So JLR segment is doing well. They did come up with the reimagined strategy. The passenger vehicle segment, Indian Auto Space, they did get a private equity guy into their EV unit. Commercial vehicle segment is doing really well, and all of these stocks actually rallied the stock of Tata Motors, which was up close to 160% in 2021.